a great pleasure to speak to you today on a very simple concept or a simple statement. Sandboxes, more than playtime. And we're going to take you on a journey today. The team here today is going to talk a little bit around what is it that sandboxes deliver, what are the outcomes from them, what happens from a global perspective and the best practices in sandboxes, and also from a collaboration and industry perspective, where are sandboxes going in the future? So think of it as one story in 3 acts. What is it that they deliver? Why do they matter? And where are they going for the future? So that's the story we want to tell today. And with that in mind, what we'd like to do is, hand over first to probably one of the most important aspects of a sandbox, which is outcome-driven. Do sandboxes have clear and tangible outcomes for consumers and the financial system? So if you can recollect, for those who can remember, at the start of the year, we opened our first Innovation Sandbox program in the Central Bank of Ireland, based on combating financial crime. A 6-month program based on regulatory advice and support, with data sets to support from a testing perspective, and collaboration between industry and right across the central bank subject matter experts to support and engage on a really vital theme of combating financial crime. And we have Steuart, the Innovation Sandbox Program Manager, Stephen from Moran from PTSB, and Rob Leslie from Sedicci, who are going to take us through the outcomes from the first sandbox. Steuart, over to you.
Thanks, Dave, and good afternoon, everybody. Our sandbox is all about solving for problems. And to kick it off, Steve, can you tell us what problem you looked to solve for in the sandbox program?
Well, I suppose, Steuart, when we think about problems in retail financial services, we think of them in terms of jobs to be done. Jobs to be done for customers, jobs to be done for our colleagues, or jobs to be done for the banking sector in general. And where there's an alignment of all three, it can be very impactful. In this particular case, it all started actually in terms of our account opening. And if anybody who's opened an account any time over the last few years, you'll understand the process. It's very much put in some information digitally. Then you get asked for your passport and your identity, and you get to a proof of address verification, some more stuff, and then you get to the end. But the reality is there are some inconvenient truths in there. And one inconvenient truth is that when we analysed that account onboarding journey, there were big spikes in terms of delays. So time to onboarding was actually, time to account opening was really long. And so where is that hiccup? And that hiccup is actually on proof of address verification. And why is that? Because as part of that, virtually every bank uses some sort of document upload process, whereby you take a utility bill, you take a driver's, or you take some sort of state documentation, and you upload, and that's verified. But the cost to actually maintain that is hugely onerous, both in terms of time and money. The technology, the OCR technology that's required to keep updated with the templates. So every time that the energy supplier puts an ad at the bottom of his document, suddenly all the banks have to update their systems. And that's the reality. But actually the knock-on impact for customers from a customer journey perspective is that, number one, they're actually going through that journey. They get kicked out when they do the document upload. It needs to get referred to AML operations, and in many cases it ends up, thankfully, given that we have a branch network, for somebody to come into the branch. So there is a high organizational overhead in relation to verification of a proof of address verification. There's a poor customer experience, and there's a cost outcome there. And so the challenge for us really, and say, is this just us? And when we actually did the analysis across Europe, actually, we could see that this is an inconvenient truth and a dirty little secret, I would say, for financial services. First-time pass rates are actually typically around the 20% rate. We know one bank in the UK that was fined 21 million back in July for effectively turning off their proof of address verification because they said if they kept it on, they would actually have very few customers coming through. That's a digital bank. So whether you're an incumbent or a digital bank, proof of address verification is a challenge. What we identified was if there was an opportunity to be able to go to take that leap, rather than the AIification of document processing technology within the bank, if we can actually take that leap, use an authoritative source, take something independent that is a pseudo-secret from the customer, in this case, their meter point reference number at the top of utility bill. 70% of all customers in PTSB present a electricity utility bill and they have a wide range to choose from as their chosen document. And if you could somehow validate that with an authoritative source that is up to date, and wouldn't that be fantastic? And wouldn't, and this is the key thing, wouldn't compromise GDPR or the Criminal Justice Act. Wouldn't that be something? And that's where Rob and the technology, the Sedicci technology comes into play.
Thanks, Steve. I really like that's an industry-wide problem that you're looking to solve for. Another aspect of our sandbox is we love collaboration and to see collaboration happen and to foster that collaboration. So with that said, Rob, could you talk to us about why you applied to the sandbox, the partnership between Sedicci yourselves and PTSB?
Yeah, absolutely. So Stephen has given you an example there of a very specific use case that is a pain in the neck for absolutely everybody who wants to open a bank account. Today, we've heard about simplification of processes. We've talked just now about tokenization of assets, the digitalization of money. What we have been thinking about for the last number of years is how do we make the process of engaging in the financial system easier? And just one of those components is what Stephen just talked about, proving you live where you live. Traditionally, we've done it with a paper utility bill, but this is the 21st century, not the 19th century. Why can we not do this in a fully digital process that is privacy preserving, secure, and delivers instant results to the organization who needs to get it, right? So that's what we do. We essentially put organizations who've got useful data on one side together with organizations who need access to that data on the other side instantly, so that you get a result, whether it's a proof of address, a proof of identity, a confirmation of income, are you dead or alive? Are you a real person or an agent? All of these things are questions that digital commerce is going to require. And it will require collaboration of every single component in our commercial ecosystem. Banks, regulators, telcos, government, you name it. Everybody has got something useful to contribute to this ecosystem. And it's about putting those component parts together in useful ways where everybody can collaborate while still respecting the rights of the individual. So your rights to privacy, the rights to the use of your data, all of those things are fundamental to what we do. Now, to Steuart's question. I had done 2 iterations of the UK's Innovation Sandbox with the FCA. And one of the things that I took away from that was, if you are able to partner with somebody, you will get far more out of it, and they will get far more out of it than if you try to do this on your own. It's a little bit like going to a dance without a partner. You'll spend 80% of the time looking around the room to figure out, who am I going to dance with here? Whereas if you go with somebody to begin with, and we're holding arms and we trot in and we're ready to boogie, then things can happen. And that's what did happen. We figured out very early on, he had a problem, I had a solution, and the guys who had the data were actually willing to play ball as well, which is the ESB. So we were able to put all of those component parts together and deliver a result that got Stephen's 20% up to 60-something%, with a little bit more tweaking to over 80. Yeah. Now, the next phase of this, what I would love to see happen, is the government engage, where I'm able to then take access to passports, driver's licenses, Department of Social Protection data, where I can then prove certain things about a person, combine that with name and address and other things, and instantly allow any financial institution to confirm the things they need in order to be compliant with the Criminal Justice Acts and all the other things. So you can instantly re-verify whoever you need to at a moment in time.
Brilliant. I like being ready to boogie. It's a good line. Outcomes focused. So another part of our sandbox is we always say it's outcomes focused. So could you talk us through the outcomes you achieved from the program and how the sandbox program helped with that?
Okay, well, I think the outcomes are pretty clear. One of the real challenges of actually trying to innovate from within, a retail bank or any organisation that is heavily regularly, kind of governed, is that the process is trying to change from the bottom up is actually quite challenging, because in this case, what we're saying, we would normally go through first line, second line, we would gauge all the people, and sometimes what we're trying to propose here doesn't fit within the spreadsheet or doesn't fit within the assessment criteria, the framework. Wouldn't it be fantastic if we could actually bring our second line people together with our AML and compliance and financial crime people, together with the people who actually formulated that policy? So for me, like the eureka moment, I think at the very end, Dave was saying, why haven't they engaged with us? Why are they not asking the questions? And the reality is that we assessed everything around, and we went straight. We had Neville McCormick sat with us and said, so instead of what we would normally do, which is trying to fight against maybe a procedure that was based on a policy, which is an interpretation of a regulation, and what normally would happen is you would seek a clarification of that regulation, and 2 months later you might get a response back. In this case, we're sitting and doing stuff together. So it's not even about me as innovation trying to do something. It's actually bringing our people with us collaboratively with those. So there are no derogations, there is no kind of circumvention, but there is a collective understanding, a shared understanding of what it is you're trying to achieve. And that for me was the biggest outcome.
Excellent. Rob?
For me, I think there were a couple of things that I really took away from this. The first is the convening power of the central bank. The central bank sits in a very privileged position at the top of the ecosystem and actually can make things happen gently. They don't have to bang heads together, sing and dance out loud. They can just invite people to come, and they will come. What we learned in the space of 4 months is that we probably got 18 months' work done simply because we were able to get the right people together in a room to discuss a problem. And I see Tommy down there. Tommy gave an hour of his time that otherwise potentially could have taken 3 months of letters backwards and forwards, emails backwards and forwards. We've all been there, we've all done that. That is the power of the convener, to be able to bring the key stakeholders together in a very safe environment so that you can ask questions freely and get answers that actually make your life a lot easier. I know, we came out of it with a working, almost production-ready system. The next phase of this is what I'm really looking forward to, which is we've now proved something. And I personally don't want to see, the efforts of all the 7 companies that went through the sandbox kind of sitting on a shelf. It is now incumbent on the industry to take those solutions and deploy them, because most of them are ready for pilots of one kind or another, proofs of concept, and they will make a difference to how the ecosystem works, the efficiency of it, the cost that is currently incurred. All of those things will make a difference to the lives of the citizens in this country. So don't let it stop, is what I'm urging all of you in the audience who are decision makers in this space. Otherwise, it degenerates into what I colloquially call innovation theater. We all stand on stage, we all look great, we do our bit, but then it stalls, and we do not want to let it stall.
Great, Rob, Steve, thank you. Back to you, Dave.
Super, thanks so much, guys, appreciate that. I really do like the image of Rob and Steve as the dance partners. That's a new one for me. Thank you so much, but I like the fact the way you talked about those outcomes, and those outcomes are hugely important. And other central banks are thinking about sandboxes, and they're looking at their models of sandboxes, and they're looking at models for engagement. They're looking at models of innovation, engagement, and collaboration, and I think you've heard that word consistently talked about, collaboration, not just in the work we've talked about here for the Sandbox, but throughout the day. The word collaboration has consistently come up. And as other central banks think about it, there's an awful lot of research, there is an awful lot of focus and understanding on what are these models of innovation? What's happening globally? What are the best practices? And where does Ireland fit in that with its first Sandbox? So to help us on that, we asked the University of Limerick in the Kemmy Business School, under our very innovative program across the central bank of the Research Affiliate Program, to come in and work with us to really understand and shape how is our Sandbox performing, how does it fit within best practices, but also Sandboxes themselves, what are they delivering and how are they performing? So to help us understand that, Carole Donaghy from the Innovation Strategy team and also Eamon Leonard from University of Limerick, who did that work, are going to have a conversation about some of those best practices they've seen. Carole, over to you.
Thanks, Dave. It's great to have Eamon here with us from the University of Limerick, who is the author of the paper, Regulators as Innovation Enablers, Social Capital and the Central Bank's Innovation Sandbox. So it's quite a piece of work that was undertaken. And what was quite different about this is through the research program, we engaged in a partnership with the University of Limerick. And we gave them front row seats into the Sandbox. We were transparent, we opened up, they sat with us through the modules, they listened in, they were a part of our showcase. We very much opened it up to show them, to understand our methodology, understand what we were doing, and give us an understanding to that. We had the opportunity to architect and build a program from grassroots up. So they had the ability to look to industry, ask industry, engaged internally, and look across the globe about how these programs were undertaken. And we had the privilege in Ireland of building our program. We're here today to delve a little bit deeper into it, as Eamon has done an outstanding amount of research on this. So Eamon, I have a few questions for you so we can get deeper into the research that you had undertaken. The first one is I want to start around the global context. So as regulators around the world, our job is to support innovation. But it is also that we have the safeguard of consumers and the markets. Now tell me a little bit about that tension and how do engagement-led sandboxes fit in there?
Thanks, Carole. Probably to start with, that our academic paper was thanks to the central bank for inviting us in. It's very exciting for us in academia to get a front row seat. We're kind of flies on the wall, and we didn't go in with any feeling one way or the other about it. It probably happened within 2 days that we were invited, and then we were up there. So we were wondering about what's this all about. So we'd no preconceived notions, and throughout the 6 months, we were very surprised in how the Sandbox worked and in how the central bank, its deep thinking prior to starting the Sandbox made such a huge difference. And myself and Carole, we presented to the European Forum of Innovation Facilitators in Paris last week, and we discussed the findings of the paper. And again, it surprised me again that how all the central banks across Europe and their innovation teams, how excited they are about collaborating with each other. So to answer your question, what we looked at in the paper was this is the central bank not as a kind of constraint setter, but more of an orchestrator of innovation. So initially for us, that idea of the central bank being out there helping innovators was probably something that people would find strange. We discussed these things internally on our research team, and our first question was, they're doing a Sandbox, but they're not waiving any rules. So people are going in testing, but the central bank isn't giving a derogation of rules. So we checked the research. We were given what the central bank had looked at beforehand, and lo and behold, that in a regulator setting, you can't just get rid of consumer rights. And so then we looked at okay, so what are these tools that they have? They've regulator sandboxes. So as opposed to giving away, kind of derogating and putting rules and regulations,
what central banks can do and have done in different jurisdictions around the world is that they've given temporary derogations to certain things like reporting or disclosure, but nothing that would actually impact on consumer rights. So that's their one tool that they could use, is the regulatory sandbox. And another is the innovation hub, which the central bank has used very successfully, whereby that people can come in, ask questions in an environment that is, they get non-binding advice. So it's an open door policy. So I think what's happened is that the central bank has probably mashed them together and looked at the literature, and they have a kind of a sandbox, which is like an innovation hub.
No, that answers it well. Thank you, Eamon. You talked about the different countries, and we did have the opportunity to go to Paris and present on this, about how they approach innovation facilities in practice. So if you can go a little bit deeper into that.
Yeah, so this probably just extends where, again, our first thing is where are the waivers? So in the literature, the OECD and the World Bank, first of all, that innovation hubs reach far more firms. They generate impact earlier, and it's a lower cost. There has been sandboxes with some form of waivers in Australia, UK, Hungary, Singapore, and there was a 2025 paper by Kalman et al. And they found that they did participant surveys, and they found that the participants found the real value was in the sustained dialogue and the clarity from working closely with the supervisors, rather than the small derogations that they got. So, and they found in their research as well that this correlates with better funding for early startup firms that are within the sandboxes, and actually firm survival post the sandboxes. So we went from there's no waivers to that, engagement can beat this legal flexibility, and that there's an evidence base for that.
Great, Eamon. This is all sounding very positive, but tell me, there are definitely challenges and limitations. What did you see emerging across the various jurisdictions?
Well, after listening to the guys there, it didn't sound as if there was many. But within the sandbox itself and the discussions that went on, and in the literature, like there's a few kind of key points that come across, which would be just in the entry criteria, that the access for that, like early stage firms can sometimes struggle to meet entry criteria. So that's something that happens. From a central bank point of view, which came across when we were in Paris, which sounds great, right? But when we were in Paris last week, that it's a lot of resources for a central bank to run a sandbox. So that, like what our paper talks about is that if you plan up front, and if you do things right and you're open and honest with everyone coming in, that whilst it is still resource heavy, you probably will get better outcomes from it. But that is something that comes across in the literature. Another is cross-border limits, whereby that you might test in one sandbox, but then it's no good in other jurisdictions. And that might even be like not only jurisdictions across the world, but even jurisdictions within Europe that it mightn't cross over. So the European Supervisories Authority have set up the European Forum for Innovation Facilitators to help align approaches across the different jurisdictions. And we have IBEC here as well, which will help to push the industry agenda as well.
Great. Now, Eamon, in the study, you delve very deeply into social capital. Now, I don't know about anyone else here, but it's not a word that I would have commonly used. Can you go a little bit deeper into what that meant?
Yeah, so this is a kind of an academic thing that we write reports and then we convert them into different language for ourselves. We share it then with everyone else. So social capital is it's the idea of networks and relationships can create value themselves. So it's unlike physical capital. So physical capital depreciates. Social capital, the more work you put in, it grows with use. So it's the idea that connections between people are themselves a resource. Probably a big distinction with social capital, it's a public good. So here, that means that it's not owned by any one individual. Like it's the capital is created by the interconnections with people, and that is, so I had loads of examples, but from listening today that this is an example of how social capital is created, that people are coming together because there's a trust here and that people want to collaborate and work together. No one, I think, is getting paid for being here. We're not. So, so I think that there's not a monetary thing here. So this was, and when we were over in the EFIF as well, the same idea is that people are collaborating for a kind of a greater good, which is wonderful, and that is what social capital is. So what we did was we looked at, did the central bank create social capital in the sandbox, and how did they create it? So like, did they think about this at the start? Maybe not the word social capital, but did they think about it? Did they go, okay, that we want this to work in a certain way, that there's trust and there's different things happening to help the connections work better? So there's a paper by Nafiat and Goschel, which basically looks at how you create social capital in an innovation setting. So they talk about structural, relational, and cognitive social capital. Hope I'm not getting too deep here. So basically, what we saw in our research, which was our fly on the wall, we had interviews with the participants, we had interviews with the central bank, we got to see the surveys, and we had an overall 6 months engagement with this, and we get to talk to people. Like today, just in the room earlier, we get to talk to the participants on it. So what we saw was that the central bank did deliberately design the sandbox to create social capital. And we shared this to the other national competent authorities across Europe just last week. And again, that they were quite excited about this, that they like a simple thing of planning something and thinking through things actually works. And we itemized these things in our paper. So we looked at structural capital, which is the first part of Nafiat and Goschel. So that's the architecture. So what's the architecture that the central bank built? So that's the planning and the setup and stuff. Relational capital then is the second part of it. So to make connections work, we must all trust each other. So if we didn't trust each other, we wouldn't engage and stuff. So they had to create an environment where there was trust. And then cognitive is the third kind of pillar of this. And that's where you have innovators and you have supervisors, and they speak a different language. They have, not only do they speak a different language insofar as they use different acronyms, but they also think about things differently. So they have a different mental mind box when they're talking about things. So those things that the central bank actually put in place things to create capital in all those three aspects. So hopefully you're going to ask me what they were.
I will do that. You talked about the framework there and the various elements that the sandbox had in that. As the fly in the wall, you got real look at that and what would actually look like on the ground. What do you think were the real design choices that made a real difference?
Yeah, so we, in the paper, I'm not selling that you should read the paper, but we go through quite a lot of them. But the ones that jumped out at us were that how the central bank, how the sandbox came about. So our thinking was that maybe it's the governor came one day and said, you're making a sandbox. Or the innovators said, we want to do a sandbox. But it didn't happen like that at all. It was, there was a kind of a hub and spoke model where that everyone inputted into this idea that maybe we should do something. Some people may not have wanted to do it one way. And this was shared. The conversation was shared. They went out to industry. They talked to like lots of people. They did. I got access to the literature that they had read before the sandbox was created. So they did an awful lot of work on this. So what we were saying afterwards is that the sandbox, it wasn't kind of siloed. It wasn't that the innovation team were down in a basement working away. They were like, it was institutionally owned. The second probably big thing was their setting up of a champions network. So I think there was 12 to 15 people within the supervisory roles of the central bank that, that were part of this network that the innovation team could ask questions up and down to different parts of the central bank. So for that to work, that all these champions need to be part of the sandbox. It wouldn't work if they were just named but had no influence in how the sandbox worked. So we found that upfront structural, architectural working created the underpinning for what came next. So the second thing, I'm okay for time. The second thing was relational. So relational, this is where, again, we're trying to like make things, relationships work and connections to happen. So the relational bit is about building trust. So the central bank said up front that, that this was not, they're not endorsing the firms, which sounds like, you know, a bad thing, and it's not a fast track to authorization. So they put that up front. So everyone who joined the sandbox knew exactly what the sandbox was about. It's on their webpage that at the start of every session, it was probably said. And this was very clear. This builds trust. It's counterintuitive if you tell people they can't do something, but it meant then, in my world, it means you can kind of do anything else then. So, so that was good. And then another part of the trust was the public value framing. So the theme of this sandbox was combating financial crime. And so this is something that's for good. It's for consumer rights. It's for good things. So if it were something different, that people coming into the sandbox would think that, oh, the central bank are trying to rob our ideas. They're trying to, it's a captive, it's a trick or whatever. So if it's for public good, it comes across as a lot better. So the central bank, again, had to plan that up front about, like, let our first sandbox be something that is obviously for public good. I think there's 3.1 trillion of fraud every year, dollars, I think, in the world. And then the third one was the cognitive capital. So this was very interesting. This is the shared language part of it. So how can a supervisor talk to innovators? So you have innovators that want to dance on stage, and you have supervisors then who may not want to dance on stage, I'll say. So what they did, again, pre-planning, was that they staffed their team in the sandbox with people from different backgrounds. I think one of the central bank official I interviewed called it like a rugby team model, that people were diverse, like lots of different shapes and sizes, but lots of different thinking. So there was innovators, there was people from marketing, there was people from industry, and you still kept your supervisor element, because you need someone that can talk to the champions and talk to the different levels within the central bank. So another thing they did on the cognitive thing, whereby that we want different innovators and central bankers to speak the same language, is that they shared artifacts, is what we would call it. So the data sets from NEA1 that were both synthetic and real-world data sets, so that they gave them to all the innovation team, and they ran a hackathon in University of Limerick as well, which was great because that was my class, so they were delighted. They got a certificate from the central bank. And all those things created a kind of an environment where that people could start speaking the same language, and they understood each other. And what we found at all these classrooms was that the conversations were very robust. Like, people were open and they were free to talk, and there was no kind of hierarchical chain, that there was no fear to say things. And so that's what we experienced.
Okay, Eamon, I promise this is my last question, but I'll give you one opportunity to summarize your study in one line.
Okay. I'll do that in a sec. I wanted to say one other thing that we, another thing though that came out of it was which I forgot to say, was that the central bank learns as well. So this is what we call horizon scanning. So this is where I think one of the quotes I got was that from the central bank, in one of the interviews, it was like a front row seat to innovation. So like, it is good as well for the central bank to gain from it, and that gives them that helps their regulatory, it's like a regulatory instrument as well that everyone is learning. So when you can't change the rules, you can change the relationships. So a well-designed sandbox can become one of the regulator's most powerful tools. That's what I'd say.
Thank you, Eamon. That's been a great exploration of your paper and understanding and bringing that to the fore, and looking at how regulators can build relationships for safe innovation. And as you had rightly said, your research really delved into, if we can't change the rules, we can change the relationships. And that's what's really made the difference through the Sandbox program.
Yeah.
So thank you.
And thank you very much.
Over to you, Dave.
Carole and Eamon, really appreciate that. So I promised you that we would go on a journey, that it would be a story in 3 acts, where we would look at what the Sandbox has delivered. Then we would look at some of those best practices and learnings and what we've seen. But the third part and the final part, and thank you to Audrey, both for being so patient on the stage, but also for Audrey representing FSI and industry as a whole, for the collaboration and cooperation that happened in relation to the design and the delivery of the Sandbox. That design and delivery resulted in 38 applications across industry for the first Sandbox, which exceeded our hopes for the applications. And to do that, you've got to have that really strong co-design. And that's where Audrey and the team and industry as a whole coordinated with us. So I'm going to sit with Audrey now, and we're just going to have a couple of questions really around industry engagement. Thank you. Industry engagement and the future of Sandbox as well. So Audrey, I suppose first of all, before we even get to the outputs of the Sandbox and delivering the Sandbox, industry had asked for a Sandbox. They had been calling for a Sandbox for quite some time. What do you think it is about Sandbox and Sandbox features and these innovation models that are important to industry?
Thanks, Dave. And we were delighted to collaborate with you and with your colleagues. So I can relay that thanks indeed for the engagement that continues so valuably with the bank. But actually, what I'd like to do is just take Rob's summary of why it's important, because he articulated it so well, I think, from an industry perspective, and place it in the wider context that we see as a whole of industry group, because we are now probably the broadest financial services centre in Europe. So when you think about the breadth of activities that are here, so where we don't compete on scale, perhaps with Paris or London, we most certainly compete on scope. When you just think about all of the activities that are here, from leasing of airlines to corporate treasury, and I'm looking down at some of our members there. Banking, of course, Irish funds being invested in 1 trillion of European assets, and the PSPs processing 21% of EU transactions. I mean, it's strategically such an important, stable EU asset. So when we look at the breadth of the industry, certain things are common to its needs, skills and innovation. and the pace of innovation is changing. So again, the vast majority of those activities are central bank facing. So we were looking around Europe thinking, okay, there are already 13, now 14 sandboxes across Europe. Why don't we have one? But it's not just about the aesthetic and saying on a list of things we have, oh, we have an R&D tax credit and we have an innovation sandbox and we have an innovation hub. It is all of those things that Rob articulated, which is that, and indeed Eamon's paper summarizes it really well. It is a regulatory instrument, even a non-waiver one, because it's about that shared dialogue around what's happening in the industry, how business models are changing, what we need. And it was a really good exercise for us as well. And it was nice to see a lot of coalescing around the central message was that innovation is for the benefit of consumers ultimately, clients, customers. That's ultimately where it needs to go. So,
Brilliant, great stuff. So, Audrey, when you think about that, that coalescence that results in outcomes in the first sandbox, and as we went through the first sandbox, there was lessons learned. You don't always get these things right, but also, at times, difference of opinion around maybe what the regulator is able to do or what industry may want in certain aspects. So were there learnings in that during the model of the sandbox? And are there things that you think going forward into new sandboxes and so on, you say, there's some of the key things that we've learned and these are the ways from an innovation engagement?
Yes, is the answer to the question. So when we embarked on this, one of the things we quickly discovered, thankfully, was that leadership in innovation was definitely a shared priority with the central bank. And our chairperson, Declan Bolger, the CEO of Irish Life, last week at our annual dinner called out the central bank under the leadership of Governor McClough that it has balanced, robust supervision with this focus on innovation, in particular thanks to the stakeholder engagement and the innovation forum. So there was a lot to work with there in terms of that shared intention around innovation. So just practically speaking, and we've already covered kind of the process and how the bank was shaping its own thinking about delivering a sandbox, but it was an agreed action from the innovation subgroup that FSI is chair of the industry part to deliver a paper setting out what we would consider to be best practice in terms of regulatory sandboxes. So under the stewardship of Joe Heenahan, our then chairperson of Revolut, we submitted a paper to yourselves. I think Sonia got it first. So it set out what we thought to be core principles. And again, it quickly became clear that our thinking, or where we arrived at, having gone through those perspectives that you just asked me about, which were different, and obviously perspectives are different, but also views are very different, that actually what we got as a sandbox is really close to what we considered to be best practice. And yes, we had a journey to go on in terms of what to ask for and when. So we're an industry group, we're always going to push for and ask for what we think should be next and when it should come. But equally, in this process, we were mindful of what was important to the bank. And we respect that, and we can see from Eamon's paper that those things have been really compatible with each other, the non-waiver piece in particular. We asked for it to be a limited time frame, phased basis, 5-6 participants maybe, so really focused on a theme. So again, we had to create consensus around these things, but we had the good leadership to do it, and we arrived where we did.
Well, actually, Audrey, that word of consensus, I always wondered when you were bringing that consensus together, both in the features of the sandbox and the types of the themes. There are lots of voices in the industry who want certain things and different things. When you were bringing that together, was that a difficulty, or did you see that is actually, once you have something to coalesce it towards, it becomes quite easier?
Yes, it does, but as a trade association, it's part of what we have to do. Otherwise, we wouldn't exist. Industry needs a forum to come together where it can work through these issues and arrive at a suitable outcome. So it was our job. So
when you think about the future and you think about, we're now moving into our second sandbox. So we've announced innovation and payments. There's a second sandbox. We've just recently closed for applications. And we'll be announcing the participants in the program soon as well. That's a really big theme. That's it. That's a big challenge, innovation and payments. Are there things when you look at that innovation payments and you say, here's areas that industry are concerned about, here's the challenges ahead, some topics and areas that you think that this sandbox can be focused on?
Yes, absolutely. So I think, first of all, framing the second iteration of the sandbox, first of all, to acknowledge how happy we are to see a second one. And last time it was me asking you the questions, Dave, and I asked you, what does the bank need to continuously see from the sandbox in order to keep it? Because we really want to see it continue and grow in strength. So the adaptability of this sandbox has been a bit of a calling card, I think. And I don't want to stray into Eamon's territory here about reviewing it, but the fact that you could pivot at a certain point and say, we need to do an FCA-style synthetic data and identifying that further for the next iteration is really a great reflection on it and how well organised it's been. So I think we're feeling really hopeful about the payments one. And I know the first one was financial crime, but I do think probably fraud, when I think about the low-hanging fruit in the payment space, I think that's where most people are going to go to in terms of a technological solution or a solution, an innovative solution around when payments are changing form, how we're going to shield people from fraud risk. So I think that's a really important piece. Bearing with me for a moment, but just, you know, you've mentioned as well around financial inclusion and well-being in the context of this new iteration. And so fraud is one, but that inclusivity piece is really important. And I think the sandbox will have a really important role to play in what we achieve under Savings and Investment Union. So what we're trying to do is exemplify the principles of Savings and Investment Union at home, while also hopefully being a kind of a centre of excellence at European level. We have the know-how here institutionally, and we can create the vehicles here to channel capital to more productive means. But this actually ultimately is in the hands of individuals. And if you don't create trust and buy-in and inclusivity around payments, it's not going to work. So we have a multitude of proposals out around how we can make SIU work, but certainly we welcome this aspect of the sandbox that we'll work on those. I just wanted to call out as well that the no single team element, whilst you're managing it and managing it so well in your team, Dave, is really important as well for us looking into the payment space. So the fact that there's that champions network in the central bank, so that shared learning will take place, we'll develop the skills internally, looking at those problem statements would be really valuable. And just calling out what we've already submitted as the problem statements from FSI over the summer. We think that the interoperability piece will be big, so how SEPA will interface with some of the members were talking to me this week about the Brazilian equivalent of SEPA, you know, so the interoperability of payments with that. And then how to... Oh, yeah, no problem. How to introduce efficiencies for large enterprises around high volume, cross-border, multi-currency payments. There's a lot of problems there that, you know, we're not going to solve everything. It's not a one-stop shop for solving these innovation problems, but certainly with this sandbox, it just has huge potential based on it. So thank you.
Strikes me that there's no shortage of themes for the future.
Yes.
From an industry perspective, from a regulatory perspective, no shortages. Maybe just one final piece to finish on, Audrey. And it always struck me, you know, in our engagements in the innovation subgroup, where we were having the conversations about the design, one of the things that, on behalf of the industry, that you said was, get on with it, and it's okay, make mistakes. You don't have to get it perfect the first time around, and that learn from those mistakes and develop from those. And that comes back to what you said around that trust, that element of trust in the development and the delivery of it, and then getting on with that and learning from some of those mistakes. So maybe to finish up, is there areas where you'd say, you know, going into the next sandbox and looking forward to the future as well, into sandbox as well, where are those areas we should double down on? Where are those areas we could improve on? Are there areas you think, yeah, they're the things we should really take forward from the sandbox?
I think that adaptability piece, so having an eye on what's coming. The horizon scanning is really important, and the central bank and industry both have a role to play. So whatever the central bank can do to foster that kind of innovation and deliberately orchestrate it, then as Rob said, it's also up to industry to reabsorb all of that. You know, it's being generated, so we need to be there to actually absorb some of that really good output. AI is going to change so much about the industry, about how we work, but it is also going to bring a lot of benefits. So I think that would be a really important area as well to be able to pivot to.
Fantastic. Thank you so much, Audrey. So you've heard the story in 3 acts. You've heard the outcomes. You've heard the focus on what's happening from a global perspective. And you've also heard, thank you, Audrey, for the industry viewpoint and where the future is going for sandboxes. Our next sandbox, as I mentioned, is innovation and payments. We have a journey ahead of us, a journey of exploration and innovation. But to say to everybody in this room, to say to the panel, thank you for that support and collaboration on the Sandbox #1. And we hope to do that again with our second Sandbox as well. But very much Stephen, Steuart, Rob, Audrey, Eamon and Carole, thanks for the time today. Let's give them a big round of applause.